Oh, hey, happy Tuesday. Hope you're all doing well. Let's dive into an outlook, see what's going on for pound US dollar. Start on the weekly chart as we always do. As we can see, current week's candle still pretty bearish, but we're starting to develop a lower wick to the downside after taking out previous lows that we seen yesterday, which, as we were kind of discussing, could be an indication that there is sensitivity and we could start to see price moving back to the upsides, but we'll just have to wait and see how things progress. But if we go to the daily chart, we can also see that there is a bit of a bullish candle forming today. So one of the things that we can look at pretty much immediately from Edgeful, as you know, I like to now incorporate all this data because it's very useful. And for those that joined the session in the Discord, thanks for attending. Hopefully it was super useful. Obviously the recording was posted to the website as well. But if we are looking at a bullish weekly candle, so if we're envisioning that this took out the low, the fact that we're reacting to weekly demand here, we're going to start to see that candle flip to the upside and close bullish. Go back to the daily. And now that we're starting to switch bullish, we're looking at, okay, if we're looking at that bullish weekly candle, what's the probability of the low of the week forming on Monday? It's 45%, which is the highest throughout the entire week. So obviously, if we're looking at that and, kind of making decisions, we can say, all right, well, this is, if I put this on correctly, the low of the week. And this would be the previous low of the week, which I'm actually going to get rid of now because it's not really super useful for us. The main thing that we're kind of just concerned about is the current week that is forming. So we have the high of the week, the low of the week. Obviously right now, just being Monday, being completed and it now being Tuesday, we're pretty much just inside yesterday's candle. We could also take it a step further and say, okay, what's the likelihood of today being an inside bar? There's about an 88% probability that it's not going to be an inside bar, 12% being that it will be. If we go by weekday and factor in the fact that it's Tuesday, it remains the same, which means that there's a high likelihood we are going to break to the upside or to the downside today, but we could still close as an inside bar. And if we look at news for today, that can be the catalyst. There is no news today. It's not till tomorrow we start to get crude oil inventories, FOMC meeting minutes, and then we have CPI later in the week with final PPI on Friday. So the news is definitely slated towards the later half of the week. If we look at the previous day's range, and I'm going to put on market sessions because as I talked about yesterday, when we are discussing the prior day's stuff, if I only have New York selected, it's going to basically look at the high and the low. So if we've actually looked at this, we've taken out the high and the low. So we've had a bit of a double break. And as we can see, if we're just kind of looking at this the way it is, we get that sweep, that break of the low, and then we're starting to continue to the upside here on the 4-hour. So we could view that more as a green day. Yes, we did break the bottom side, but we've now just broken the top side, which gives us an 85% probability. 85% is higher than 72%, and we've broken both sides, so we can kind of read between the lines there. Obviously, if we now go to all day, 5 till 5, get rid of the Edgeful market sessions indicator. We'll just get rid of that. And just look at the day as a whole. We can see we're currently just inside the week, inside the day, as I said, with the 88% probability of moving either one side or the other, not being an inside bar, so breaking a high or a low. And if we look at that, and just kind of look at this by weekday, still really good probabilities of either side breaking. We're obviously looking like the top sides could be where we break, but it's good just being able to have that set of data to kind of give us an edge on how this stuff looks. And if we look at opening week's range, rather, you can see that obviously we're still formulating that. If we go to just Monday as the range, it's going to be kind of a skewed data set where basically we're going to see a double break just because, the range hasn't set. But as we start into solidifying Tuesday, obviously Tuesday is forming, we start to get basically a third each with the probabilities kind of siding closer to breaking the high or the low. And then once Tuesday closes, we start to form Monday to Wednesday. Then we can see that breaking the high and the low are staying within those 3 days becomes a little bit less probable. So obviously right now, this isn't a super useful report to us. So we're just going to close it, but it's always something to be aware of as we continue moving throughout the week, because as we build this weekly range, we can then start to factor that in to our weekly candle, because obviously if we've had 3 days printed and we kind of know the probability of where the low and the high are supposed to form, if the candle's going to close in one direction, then those 3 days are kind of dictating something, and we're seeing price action starting to move in one way, whether it's, and in this example, if we are truly moving bullish, the low of the week forming on Monday, then if we start to build a range, so say Tuesday breaks the high, and then we kind of do something like this, and this is our opening week's range, and we're closer to this, and we have demand and control, for example, we can start to pair together that this is the likely outcome to put the high of the week in on Friday, for example. It's all about using the data that Edgeful provides, but then, of course, being more focused on how we actually trade, applying the strategy, and just making sure that we're in tune with that instead of just blindly following data. This is really great, but this requires that you have some sort of edge also that you can look at. Was I looking at the wrong report? You can probably tell me. Yeah, I think it was. Maybe not. I could have very well been, though. Or no, I closed it. Okay, sorry. Apparently my brain's still not working 100%. I am feeling better today, though. So yeah. But yeah, we're going to put on our market sessions really quickly, and again, look at one of my preferred reports here from Edgeful, and that's the Asian range breakout. So what this is suggesting, if we break the Asian range high, we have a 75% probability that the day will close bullish. As we can see yesterday, we broke the Asian range low, and we did end up closing bearish for the day. Pretty much had a flat New York. We pretty much just ranged. The open was basically the close. Actually, it looks like it was exactly, but as we can see, when we broke down, we had a bearish London session, and then obviously because we're reacting to weekly demand, daily demand, we're starting to see that fight for control. So definitely something that we can factor into our analysis. If we go to the market session correlation report, we can look at Tokyo and London over the last 6 months, and as we can see, Tokyo, or the Asia session, closed bullish, which means there's a 71% probability that London will also close bullish, and as we can see, we are seeing a fairly bullish London session, and then if London session closes bullish, there's an 85% probability that New York will also close bullish. This one we don't really need to worry about too much because we've already broken out, but what's the probability that this comes down and breaks the low? Unless we have crazy news, probably fairly low, and as we can see, there's about a 30% probability, 68% probability of breaking just one side, and a 2% probability of not breaking either side or ranging within. Obviously, we've broken to the upside, so probably going to hold that stat. And then we have a 61% probability that we will break the London high and continue higher. So we have a lot of things stacking in our favor that we should continue moving to the upside. Now, is this something that's realistic to take out this high of the week? It is very possible, because if we then go into this one right here, we had a fairly low probability of being an inside bar day, so we could just see price trickle up, take out that high, even if it's just by a tick or a pip. Doesn't really matter. That would mean it would be valid in that respect. So that's all of the Edgeful data kind of just outlined there. The useful, or the reports that I find very useful when we're looking at. Let's go back to the 4 hour and just kind of take a look here, because obviously, as we can see, we are approaching this level of supply. This has kind of been a little bit of a chain. So, we can see, and I think if I, have compared, let me just open up, let's just go capital. Yeah. So if I'm looking at a different feed, there's no wick there. So that is very interesting that there is a little bit of a disparity there. So what I'm going to do, just for, the purposes of clarity, I'm going to get rid of that off my chart and, really just focus on this. I noticed that yesterday when I was kind of popping around different charts. Obviously, I'm using a futures chart, the 6B, which is the continuous contract for pound futures. But in essence, it is the same chart. The difference is it's obviously from the CME, and the CME is a centralized feed for data. So in theory, this should be the most accurate price data you are going to get for pound US dollar in comparison to the CFD feeds. So something to keep in mind, but for clarity purposes, I'm just going to kind of ignore out that, because obviously it looked really good. We had that nice little flip that started the initial chain. And as we can see, just the way price action is moving, we are breaking and retracing, breaking and retracing. Now, the interesting part, though, is as we're starting to move up, we are kind of doing the same thing, breaking, retracing, breaking, retracing. But what we can say is, okay, this is the interaction of this level of demand. Where's the last point of supply? In theory, we could argue it's within this wick, or we could just say if this supply level fails, that's probably a good indication that we could be seeing a potential order flow shift here on the 4 hour. Then obviously if we come into maybe like a wick like this, or depending, obviously if we react and then break, that could form a nice flip zone, and then that would basically start our 4 hour front leg, because that's the biggest thing that we're looking for at this point now that we're interacting with a weekly and daily level of demand. Obviously we've been able to refine this on a 4 hour, and then if we go to the 15-minute and just kind of look at that, we can say, let me actually toss this onto the 15 minutes. Cool, that's going to work for me. So we could basically say, okay, where's the last point of supply prior to the interaction? You know, you could argue it's really going to be either this wick or even as far to say it's down here. You know, you could pick something obvious and just say this entire range, because effectively if we break above that, which we have with quite a deal of momentum, then we started to chain. So anyone that looked for longs yesterday was definitely in pretty good shape in terms of, you know, where the market actually moved, because as we can see, pretty much all day we just kind of chained. We trickled higher, obviously, so we broke, we retraced, we broke, we retraced. But as we can see, we seen a break the last point of supply. In essence, we call it supply. This ends up creating a flip, you know, so you could either look for that, to look for entries within here, and then look for liquidity if you're trading M1. But if you're trading momentum entries, you know, you could have used momentum entry here, or even a momentum entry here, stop loss here. Obviously, now you're asking yourself, you know, where's the range? Obviously, you know, this high is going to be kind of a factor, so you'd want to be break even by that. But if you didn't move to break even, you're still in the trades, taking that with your stop loss below here, and that's the power of using the confirmation entry or covering the zone in this case. You probably would have been more than fine. That probably would have got you to break even. Then you would have been taken out here. Or if you did move to break even, you know, you could have looked for a momentum entry here. You wouldn't have got it. And then it came down. You could have probably taken a range continuation here. Your stop loss probably going to be under here, but you could have put here as well. That would have caused you to be taken out for a loss or a break even, again, depending where you put your stop loss. Then you could have taken this range continuation, stop loss here. This really nice candle confirmation because it sweeps that candle. Comes up, that could have been pretty decent trade. Let me just see what the R multiple is on that. We got 7, so obviously we're going to about 2 pips. So we're not moving very much. So obviously this is where, now that I'm actually looking at the pip ranges, you know, you're really fighting for strong ranges. We haven't really moved a lot. You know, if you just look at the size of these, that's like 3.2 pips. So that would be the only caveat of why you may not have taken any M15 entries. Obviously this one looked pretty good as well, but this is later in the session. Obviously this is rollover here. And then we've seen Asia kind of pop up. Then what have we done? We've swept this bit of structural liquidity. Did we tap into this wick? We did. Looks like it's like a perfect exchange. What's the open of this candle? Is 3064, and what are the lows of these candles? 3064, yeah. So we have a perfect kind of interaction here. Basically swept all of this structural liquidity, but really this is the structural piece you'd be more or less interested in, because this low was successful in taking out this high. Nice momentous move. So anyone that basically longed in here, where's their stop loss likely going to go? Right here. So obviously when we come down, we sweep it, we tap into this zone. This would be a great opportunity in London to be looking for longs. It doesn't look like we broke the high until right here. So now if we're looking for continued longs, which is what I am likely going to want to focus on today, I think that's probably the most logical thing. We have that. Let's move that. So in theory, we could argue that this is a flip. We have initial reaction, extreme of the reaction, like a big one. The failure of the zone. So this could be a potential flip, or you could just consider it liquidity POI, which is more than fine as well. Now, whether you use just the wicks or the candle itself is totally up to you. What we could also do is, it still pretty much factors in that. That's okay. Even if we did something like this wick for the high, we have an initial reaction, extreme of the reaction leg, and a potential failure, which could also lead this to being a flip zone that we could be interested in potentially trading as well. I like this one a little bit better just because this ends up being kind of like chain liquidity. So that's IRL to target to the downside, because this supply zone could still very much hold. We're still very much in this low to, or rather this high to this low, and then we're kind of just correctively moving upwards, which could mean if we just kind of go up. You know, I know we were talking about bullish bias and all that for the day, but this is why you kind of have to do the devil's advocate analysis and kind of figure out, you know, what is the opposite of what I'm doing, and is that more valid than what I'm looking for, and all those sorts of things, just to kind of get that gut check. But if we are moving correctively and this ends up being all liquidity to push down, we go to the daily chart, there is room to come into something like that, you know. And then if I put this in on the 4 hour and just go down, we can see that, you know, that aligns pretty perfectly with this wick here on the 4 hour as well. Kind of have that nested POI, which means all of this could just be, in essence, a type of early enticement. Wouldn't really be considered early enticement for the simple fact that we never actually broke any highs. Let's just put that back on the 4 hour. We haven't broken any highs, because obviously if we're looking for a form of early enticement, we want to see this, because then that's enticing people, and it can either continue to break to the upside, but knowing that this, or this is all structural liquidity, and then price could do this. You know, this could even entice people in theory. Sweep that, do that, and then eventually this could be the actual move that continues. You know, we could start to chain. This ends up becoming internal range liquidity to target for the longs, and then we have, you know, higher time frame targets, you know, these points of structural liquidity as we continue up this chain here, and so on and so forth. So, you know, I'm kind of looking at it in both ways, just because it's fairly corrective, and we do have a little bit deeper of a POI to potentially interact with. So, you know, I'm mindful of that. But yeah, that's pretty much how I'm looking at pound US dollar today. Probably a little bit more in depth in the price action side of things, but hopefully that was helpful. Hopefully that was useful. Now that we're starting to get a little bit more PA to develop, my least favorite amount of PA to kind of trade is when we're first interacting with 4 hour demand, because the 15-minute usually consolidates as, you know, supply and demand are fighting for control. But that's it for me. I hope you all have an incredible day on and off the charts, and we'll see you inside the Discord. Cheers.